It's Anthony with Land Title. I wanted to bring you the Boulder County market update for the month of June. Lots of exciting stuff taking place here, especially the rise in inventory that is finally present, even though we've been feeling it for a couple of months. So if you look right here at the end of the graph, you can finally see the active units in green starting to take off because the pendings and under contracts are really pulling back. June is our biggest month for new inventory coming to market. Usually that's coupled with an increase in buyer demand, or at least a steady amount of buyer demand. This is one of the first years where interest rates have really curbed buyer demand and allowed that inventory to rise. I think what you're going to expect here is more like a 2018 market where we really saw inventory start to rise, and it was pretty much in a hurry, right? And that was largely due to just not enough demand. So where is this going and what does this mean, right? I mean, I think we probably need to come over here and look at the supply line by itself. So a lot of these markets have been transitioning at different times, different paces, but places like Longmont are 60% up in inventory month over month. They just didn't have as much go under contract. Year over year, we're 15% above finally where we were a year ago. That's a really good sign, but we have 721 listings. We've been in the thousands before in Boulder County, so this is nothing to worry about, right? We're just getting closer to that 2017, 2018 market feel. We're not really talking about 2019 because 2019 was, in a rising inventory environment, a lot like this, but supply had been sitting for a while already. So here we are trying to see what these changes are going to come. And I think it's going to be different paces for different markets, but you can see it in Superior. There's a lot of inventory sitting in Superior. There's a lot of inventory starting to sit in places like Erie. So some of the outerlying markets are shifting faster, but then you got places like Niwot that still only have 13 units on the market. Even though the percentage change looks big, it's just not very much, right? So let's take a look at the next one, and this would be our month supply of inventory. So this really is a balanced market's 4 to 6 months. We're sitting still at 1.7. Some markets like Longmont are only about 1.25. So when we look at this, we really need to start understanding what parts of the market and really which segments of the market are going to be moving at different paces. And if you're working in a certain market, you really need to focus on, what's happening in Louisville. Well, we have 1.3 months of inventory in Louisville. If you're selling a house in Boulder, we have 2 months of inventory in the city of Boulder. So they're going to feel really different right now. It's really important to dive into that subsector data a little bit more. Obviously, I'm happy to provide that and help you with that. I have videos on all of those submarkets as well for this month if you're interested in those. Now, where are we going? We're going up, right? We're going up in a hurry, but what it's going to feel like is still a really strong seller's market for a while because there's just not enough inventory on the market. It's not like your buyers can go, hey, we want to buy a home, we're qualified, let's go look at 20 houses and write an offer, right? That's just not an option yet. So it still feels like that seller's market. The reason it still feels like a seller's market, buyers are putting stuff under contract at record pace, right? We're still only at 11 and a half days in the MLS, so it's active to under contract in less than 2 weeks. That's a big deal, right? This is a really important thing to understand just how fast paced this market's moving. When you have a buyer, they need to understand, get out there, get active often because those really nice move-in ready homes are moving super fast. The median is something like 6 days right now. So with that being said, this is going to continue to rise from here on out, right? I think May was probably our low point. We're going to see it kind of chip up a little bit, but you compare it to the past, you compare it to years in the past. Even in 2017, and that was an awesome market. We had like 23 and a half days on market. So this is just really important to understand the rate of change for these different things. Buyers are still really hungry that are out there. They're just not the same as the sellers in the market, where we're going to start seeing the seller expectations have to change over time quickly. So there's a couple of other things that are important. Obviously, always look at the price point. Anything over $1 million right now is still doing remarkably well. Lots of sales taking place, more so than a year ago. Under $1 million, we've definitely been seeing this all year. We've been seeing this for years, where they just keep diminishing in value, right? And they're in sales. And the reason for that is the price point keeps rising, and we just don't have as many homes for sale in a lot of those buckets. The second largest place for the most sales was 1 to 1.5 million now, and that used to be in 600 to 800 or something. So not that those homes have risen that much in value, but we just have a very different buyer pool coming into town and coming into the county. So that being said, be careful and make sure you're using this data with your clients. The other one that's really important to use with your clients would be the month supply of inventory days on market by price point. Yet again, over $1 million, we're seeing some different things. This stair step you kind of see in the month supply of inventory here, that's a really good indicator of the market starting to stretch back out and get some health to it, right? Lots of trade-up opportunities in markets like this because, if you have a lower priced home, you can sell it rapidly and quickly. You might be able to go negotiate up in some of the higher price ranges. That being said, 3+ million, we have a buyer's market for the first time in months, but they're going under contract super fast. 36 days, that's like a month on the market as a $3+ million home. I would say that that's incredible, right? We've seen it in the hundreds of days for many, many times. We've seen 12 to 18 months of inventory. This isn't a bad time to sell that home. It's just properly set expectations with those clients. Or if you are clients, definitely understand that things may not sell as fast as they were. The days in the MLS, though, this is where when we start to see these numbers sit at 8 or 9 on average in a lot of these price ranges, it's still just these markets, these buyers are very hungry, right? The ones out there looking and shopping, they really want to put things under contract really quickly. So that being said, let's take a quick look at the sold analysis here. One of the big things to focus on is right here. Because of the supply shortage early on in the year, and now because of interest rates rising and that decreased buyer demand, the total number of sales have been shrinking. So 16.7% decrease year to date, right? Boulder County has slowed down quite a bit. Now, we're not even close to where we were in 2017, 2018. We had a huge increase in buyer demand in 2019 because of the inventory surge and then the COVID years. So we're getting back more to reality. I would expect to see this settle quite a bit more than it is right now. And then when you go over to one of the other ones that's really important, our average sales price, you're starting to see a shift in this as well. So right here, you can see over the last 12 months, that's our trailing 12-month number, the percentage change. This is like a true market appreciation rate, right? It's averages of averages. It really gives us kind of a good bearing on what the market's been doing. This was in the 20s, right? It was really hot, right? This market had never seen appreciation like that. We're starting to see that settle down. It's come down about 5% over the course of this year. I would expect it to settle even more, right? It's going into the fall. So percentage appreciation has changed, and this is a good sign. With inventory rising, it's going to keep driving this number down, but that's a good sign because we can't have a market that's affordable. You can't have people moving here if we keep getting 10 to 20% appreciation every year. And we settle around that Colorado average at 5.5 to 6. That'd be a really, really healthy market. Okay, so if you want to look at a slide that kind of articulates the number of sales and what's happening and kind of the seasonality coming back out of this market a little bit, coming to more of a balance, we're starting to see those sold units shift down. This is an easy one to articulate this, but you can really see year to date and all these year to date changes down here. So Boulder's down 26%, but then you have places like Superior or Erie, even look at Erie, 14.7% increase in sold units. And a lot of that was really largely due to they were so short on inventory for so long. Now that inventory is starting to rise, you've had pent-up buyer demand in those markets. So Superior and Erie have had a lot more sales, but they've had more inventory, right? Just kind of the opposite of what we talked about for years. As we're always chasing inventory, now we're chasing it the other direction a little bit. Because of that, they're seeing a boom in their sales, which may not last the whole year, but until all that pent-up buyer demand is satisfied, then we'll see these kind of sales numbers from them. All right, so big elephant in the room. This is the last one to talk about, that percentage sold price to list price. This is where I really like to talk a little bit about setting expectations because this looks like we're still getting a lot of bidding wars, right? And a month or two ago we were. It's 103% listed sale price. That's outstanding, right? If you look back to 2017, we barely peaked over 100%, and that was an outstanding seller's market. Here we are still in an incredible seller's market, but it is going to be ratcheting down the rest of the year, right? We hit our peak in April, and we're moving lower and lower and lower, but I mean, we're talking about coming back to earth, right? We're at 103%. That was an amazing number. Bidding wars are slowing down because we have less buyers. Getting closer to that 100% range would not surprise me here in the next couple of months. We just don't have as many buyers as before, and with more and more inventory, they have less to compete over. So it's just a supply and demand question. Now, if we go into the attached units, it's really similar, very similar. In fact, we're down to 102% in the attached product. We've really started to see that settle as well. This was definitely the most extreme seller's year for attached product early on in the year, but we've captured a lot of that market appreciation and things are starting to settle. So if you have any other questions on the Boulder County market or you want any other local insights, I'm Anthony at Lantado. Happy to help you out. Talk to you. to you next time.